By early 2026, one company controlled over 90% of the global rocket launch market. Space Exploration Technologies, SpaceX, achieved that dominance on the back of the Falcon 9, a workhorse that has flown more than 650 missions. That near monopoly set the stage for a highly anticipated mid-June initial public offering. Wall Street rushed in, driving the company's valuation to a peak of $2.68 trillion. At this moment, SpaceX functioned more like a sovereign entity than a standard public company. With a decade-long lead over its closest rivals, its position at the top of the aerospace hierarchy appeared totally untouchable. But the honeymoon was short-lived. By July, the stock had dropped 27%, wiping out over $1 trillion in market capitalization and pushing SpaceX out of the top 7 most valuable US companies. This slide wasn't just a random fluctuation. The stock was already on shaky ground, trading below its IPO price as investors grew concerned over the company's massive, debt-funded spending on AI and satellite infrastructure. That skepticism reached a breaking point on July 16th, when a Starship test flight aborted at the final second before liftoff. It provided the exact spark the market was fearing, vaporizing $100 billion of value in a single day. Financial pressure began to mount as short sellers, investors betting the price will fall, piled in, amassing $25 billion in bearish bets against the company's recovery. The world's most advanced aerospace monopoly suddenly had a visible crack in its armor, occurring at the exact moment its financial health became tied to public investor sentiment. A multi-trillion-dollar valuation requires more than just launching satellites for third parties. The current stock price is driven by high-stakes business models, a massive expansion of Starlink, and the creation of orbital data centers leased by companies like Google and Anthropic. Both of these ambitions rely entirely on Starship. Only a fully reusable, human-rated vehicle with Starship's payload capacity can deliver the hardware required to make those businesses profitable. Timing is now the company's greatest enemy. Around the same time SpaceX reports its Q2 earnings, a lockup period will end, allowing early investors and employees to sell 11% of the company's total shares, potentially flooding a market that is already leaning bearish. Because SpaceX is now public, every engineering delay with Starship carries an immediate multi-billion-dollar financial penalty. While SpaceX manages its market volatility, a physical threat is emerging on a neighboring launch pad. This is Blue Origin's heavy-lift rocket, the New Glenn. Throughout 2025, Blue Origin began matching its ambitious rhetoric with hardware results, completing 2 successful orbital launches, including a NASA mission to Mars. On its second mission, the company successfully landed its booster on an ocean drone ship, proving they had mastered complex reusability. This was once SpaceX's exclusive competitive edge. They are now scaling production at an aggressive pace. CEO Dave Limp revealed the company is finishing 1 full New Glenn rocket every month, with plans to reach 24 launches in 2026. This manufacturing surge creates a strategic squeeze. Blue Origin is now positioned to undercut incumbents like ULA for highly lucrative national security space launch contracts, the primary revenue source for heavy-lift rockets. Blue Origin is becoming hardware-rich. They have moved past their reputation for delays and now present a scaling direct threat to the launch market status quo. The space race is no longer confined to the engineering bay. It is now being dictated by the demands of quarterly earnings and the skepticism of short sellers. That collision of finance and physics comes to a head on July 23rd, the date of the rescheduled Starship test flight. This launch is no longer just a technical hurdle. It is a critical financial defense against the $25 billion in bearish bets pressing down on the company. If Starship clears the tower cleanly, SpaceX can silence its critics, secure its orbital data center future, and protect its decade-long market lead. But if it fails again, the fallout will be immediate. With the stock already sliding and early investors waiting to sell, another high-profile abort would likely accelerate the trillion-dollar bleed. Waiting in the wings is a competitor that is rolling a new rocket out of the factory every 30 days, ready to challenge a monopoly that suddenly looks vulnerable. SpaceX no longer operates in a private engineering vacuum. Its future now depends on a two-front war, fought both on the launch pad and the trading floor.